Hey everyone, I am back with another dividend stock investing video. I'm going to cover real estate in the video today as well. This is a really serious and important video. Perhaps my most important video to date, so please go ahead and smash that like button and stay tuned because I want to share the story in the video today how just this week I almost lost over $1 million. I am serious. This is very serious. It's really important to share my story because it just underscores how important it is to do your own research and to read all of the fine print. And so I'm going to cover that story in segment 2 of the video today, but I want to cover a lighter topic to start off with, and that is going to be Utz Brands Inc. They recently announced earnings. They weren't so good. The stock fell in share price, and I want to cover that today because it leads really well into the second part of the video today where I almost lost $1 million. So get ready everyone for a really exciting dividend investing video. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone. So in segment 1, I want to cover Utz Brands Inc. So check it out on the screen right now. Just today, I bought more shares. And the reason I bought more shares is this thing is tanking. And the reason that it's tanking is they just announced earnings. For those that don't know, Utz Brands Inc. is a small cap company that makes potato chips. They went public recently via SPAC. And they've been in business for a very long time, but they're newer to the public stock market. And when they announced earnings, long story short, as you can see in the numbers on the screen, they weren't that great. Yes, net sales are up year over year, 23%, but that's because they've made a lot of acquisitions. If you look at it on an adjusted basis, which they're calling pro forma right here, sales are actually down year over year. And if you look at the gross profit, it's up. But again, it's not that exciting that it's up because their adjusted gross profit margin is getting squeezed by high input costs. And so you can see net income is up, and it's up also on an adjusted basis. So there are some good things here, but needless to say, the results that are coming in from this company, they are not what the analysts expected. The sales are coming in light. The earnings are coming in light. A lot of that is because comparing to a year ago is difficult. It was in the middle of the pandemic, and sales of these comfort foods like potato chips were really high. But also input costs right now are getting squeezed because of inflation, and that inflation hasn't been passed along to the customer yet. We're seeing this with a lot of dividend stocks, and Utz Brands Inc. is just one of them. Now check it out on the screen right now. And so the next screenshot that I want to share today is just their outlook. What they also said is, hey, we're giving a new outlook in terms of our adjusted earnings per share. And now that outlook is 55 cents to 60 cents for 2021, whereas before that guidance that they were giving, it was actually higher. And so they go in here to talk about how the company is strong, the growth is strong, things are going in the right direction, but they are seeing these costs increase, these input costs, and management is taking actions, and they are including pricing, productivity, cost savings actions. But at the same line of thought, this won't really go into effect or really help the company until the back half of the fiscal year. And so long story short, they have some margin pressures. And so this was a lackluster earnings report. The stock started tanking today. I bought more shares, and so check it out on the screen right now. And so what I want to show you is that I purchased my shares today at $19.77. What's really important to realize about Utz Brands Inc. is I am down 17.79% on my investment so far. This doesn't count dividends, but dividends are pretty minimal on this thing. This is a growth company. And so with their new outlook, I include the new outlook range here. I include the lows and the highs from their 55 to 60 cent range. The forward PE this year is a 35.9. It's trading at expensive levels, but it is a growth company. And I do think the earnings are a little bit misleading, the GAAP earnings, because there is a lot of depreciation factored in there from their recent acquisitions. And so when I analyzed this thing, when I first bought shares, I proved to myself that the PE ratio is a little bit misleading. And I will link to that video in the description below if you want to look at my thorough Utz Brands Inc. analysis. Now, the market cap is $2.64 billion, and it pays a really small dividend, only 1.01%. Payout ratio is low too at 36%, and it's especially low because that's calculated off of GAAP EPS, and I think GAAP EPS are misleadingly low. Now, I have some charts on the screen today, and I want to show these for a reason. One of my favorite stock charts of all time is the Microsoft chart. The reason for that is you can see how this thing peaked around late 1999, and to get back to that level, it took all the way until 2016. Now, when we fast forward to 2021, we all know what happened with Microsoft. But those investors who bought in the late 90s, early 2000s, who were underwater for all of those years, but had conviction in what they were buying and did their analysis, they read the fine print and held on to it, they flourished. They benefited handsomely. Now, Utz Brands Inc., you can see a stock chart there as well. It's been up and to the right until recently it's been trending down. Long story short, I am a believer in Utz Brands Inc. The reason I am a believer is I did the research. I will link to it in the description below. I read all of the fine print. I am a long-term investor. If it's like Microsoft, which I don't own, by the way, but I love looking at the Microsoft stock chart because it tells a story. If this is like Microsoft and it takes 10 years, it takes 15 years to kind of work its way through kind of the situation they're in now and reach, new heights through a hockey stick price motion, I am fine with that because I did my research. I read the fine print. I have the conviction. And so this is the lesson of the video today. I want to get into segment 2 in a minute, how I almost lost over $1 million. But this is the most important key take home from the video today is do your own research, and don't just research it, hey, by watching YouTube videos or this analyst said this analyst said that, oh, I just like their product. No, read all of the fine print. Do financial modeling in Excel. Form your own opinion. There's a reason on this YouTube channel in my early days, I didn't even share the stocks I own. And that's because I didn't want to put content on the internet that might bias people one way or another on particular stocks. Obviously, now I discuss them. I just had to evolve in that direction to make things more concrete. But just because I say something and I have conviction in what I'm doing doesn't mean it's right for you. It doesn't mean I'm even doing the right thing. I'm doing the right thing, though, for me. Also, I own over 50 stocks. I own 51 dividend stocks, and I have a diversified strategy. Utz is just part of my strategy, and so I am wrong from time to time. Maybe I'm wrong on Utz. Maybe I'm not. Time will tell. We'll check back in 10 years or 20 years, see how it did. But that's something worth noting as well. But the key take home is I did my research. And because I did my research, even though I'm down on this position right now, I have lost money, I have the conviction to buy more. And quite frankly, I hope as a dividend investor, as a long-term investor, that it is like Microsoft, because I'd like to buy all the way down and all the way back up and have more time to accumulate a larger position. That's the benefit of being a dividend investor. I don't rely on the stock chart. I don't rely on capital appreciation. I just rely on buying solid businesses at reasonable prices and watching them flourish over long periods of time and eventually paying out huge amounts of dividends. And I think that Utz could be one of those stories. And so I want to get into segment 2 now. And as I shared in my last video, my family and I, we're considering a move. We're considering moving into a new home, and we've been searching all over the United States. And we're looking basically for a more suburban lifestyle, and we're looking for a community where we can raise our family, raise our kids, that may be just a little bit different than what we have come to experience here in the Bay Area. I love the Bay Area, but we're looking for something a little bit different from that. We're looking for more property, bigger home, more of that quintessential kind of American dream lifestyle, if you will, that classical lifestyle. And that just makes sense for us at this time. And so we've been looking at this for a while. I just shared, though, with the YouTube community recently what we're trying to accomplish. And so I want to go through a few stories today on our search that really underscore why it's important to do your due diligence, both with real estate and dividend stocks and really anything in life. And so I want to share two stories. First one, check it out on the screen right now. And so the first story, honestly, is a property we were looking at, a new home community that we actually did not even visit. And the reason we didn't visit is we did our due diligence over the phone and through interviewing the sales agent, the land developer, my wife immediately caught a red flag. And so in the first community, I've got a story to tell. Basically, what happened is the developer, we were asking about a certain model, a certain home. We were hoping to buy a new home from a new home developer, be the first person to live there. And basically, I have some stuff blanked out because I don't want to give away any of the developers or communities or make anyone look bad. But basically what it said is, hey, thanks for your interest in the blank. We are currently developing some land to have houses built on blank. There will be a total of 13 lots, there which only some can accommodate the blank floor plan. That's the floor plan we were looking at. Once the city of blank approves a methane well mitigation project, we will reopen and begin selling one lot at a time. Pricing will be announced at reopen, blah, blah, blah. The key takeaway here is this community was marketed as one of these things where it's a nature preserve. There's lots of land, open spaces, lots of greenery, lots of trees. And wait a minute, they're saying it's on hold now because there's a methane mitigation project. There was a methane leak. And so this is very dangerous. It's very sad there's already people living there. It's very sad. And so hopefully the city figures that out. But you come across these kinds of red flags in your real estate journey or in your dividend stock investing journey. And immediately you want to take pause, you want to step back, and you want to just proceed with extreme caution. We crossed that community completely off the list. We don't want to go there. And I'm going to go through a whole series of slides today that explain my thought process for real estate, but also as it applies to dividend stock investing. All of this knowledge applies to any kind of investing or any kind of financial decision. So the story number 2 that I want to share, this is the more serious one. This is the one where literally my family and I just got back from a vacation and we visited a city that we were really excited about. This is a property we were looking at in the suburbs of the city. Again, a farm to table type community with agricultural land, with farming, lots of preserved space, lots of area to kind of run around and have a good time with the kids, play ball, if you will, throw the frisbee, go swimming, all of those kind of things. And so we were looking at this and it was the perfect thing. And we got into it. We were really excited about it. Even before we visited, my wife was on the phone with them and asked for the CC&Rs. Before we even visited the property. For some reason, the broker representing the property just wouldn't get us that information. It wasn't coming through. And we just assumed, hey, the guy's lazy. Maybe, he's just slow about it. He'll get it to us eventually. And so anyway, we took a family trip for 4 nights. It was not cheap, last minute, to go check out this property because it looked so promising based on all of the due diligence that we had done. We actually went there and spent like 2 days with the sales agent. We picked out a home site actually where our brand new home would be developed over the course of the next year. I'm going to share a picture on the screen today. This is how close we were. I had my kids there, my family. We took a picture on the lot. We were so excited about this, and this is where it gets really emotional, and you have to be careful with this kind of journey with the emotions. This is the same as dividends. You don't want to chase the wrong thing, get too emotionally tied up in anything, because that makes for terrible bad decisions. But Anyways, we were ready basically to buy. The price was right. We were really excited. We were able to pick out everything we wanted. We invested a lot of time in this, hours and hours. I mean, probably maybe 50 hours or more of research and work went into all of this. Anyway, we said, hey man, hold the lot for us. I want to go home to the hotel room tonight and read all the documents. I want to read everything. I want to read all the disclosures. I want to read the CC&Rs. I want to read the purchase and sale agreement. Thankfully, I come from a commercial real estate background, and so I put on my thinking cap. I applied all of my logic from commercial real estate development and dividend stock investing into reading all the fine print, and I read everything. I was up late at night reading through hundreds of pages, and long story short, this is 12:30 at night, the night before we're going to go into contract on something. And so anyway, I was reading at 12:30 at night, and check it out on the screen right now. This is the text I found after reviewing hundreds of pages of documents, and what it said is basically, and this is at the end of the CC&Rs that the broker never sent us until I demanded them. I'm like, look, I'm not signing tomorrow until I read it. And it said blank county landfill. The blank county landfill is near the blank property with 2 active landfill sites, and they are envisioned to operate for 85 more years on approximately 2,700 acres. Long story short, this property, we had even looked. We couldn't figure out that that's one of our criteria is we prefer not to live near a landfill. Now, by the way, before I get any further, if you live near a landfill, you live near methane gas or oil wells, I am not trying to put anyone down. And look, everyone is going to have different buying criteria. I'm just speaking to my buying criteria today, and my buying criteria is largely influenced by the fact that we have 2 young kids and that I get spooked by things like this because I've read all of these things. I've heard of all these things happening over the years with water contamination and air pollution, and it just concerns me. But for another buyer, someone might not worry at all about living near a landfill. They might be just fine with it. And so again, I'm not trying to put anyone down. I just want to share my story because I believe my story spreads knowledge to the community about reading the details. And mind you, we actually asked the broker, actually another broker, there are multiple home builders in this community. And so we asked a broker who represented yet another home builder, hey, is this near a landfill? And the lady on the phone, she's like, no, I don't think so. And so anyways, this just goes to show that not only is it near a landfill, it's near a really large landfill. And for us, that's just a deal breaker. And so after going out, after spending all those hours, after picking everything out, I had just assumed, hey, what the lady told me was right. It's not near a landfill. And I had just assumed, hey, the broker we were working with, for the home builder we were working with, he just wasn't sending the CC&Rs because he is busy or lazy or just hadn't got into it yet. You cannot trust anyone. You cannot trust what they tell you. You have to read the fine print. And I'll tell you, a lot of people out there think CC&Rs, it's just telling you you can park, where you can park. It's just telling you what you can do with your property, what colors you can paint your home, what you can do in your backyard. It's just telling you those kind of things. But no, what the CC&Rs actually had at the end of them in this case was kind of a representations and warranties section where, hey, the buyer, you're representing and warranting that you're okay with this. And it basically said you're repping and warrantying that you're okay that you're near a landfill. And when I read that, I was like, oh my goodness. And then I started looking at Google Maps and I'm like, oh, that must be the landfill. And wow, it's so big you could probably see it from space. And so it was there. And we caught it at the 11th hour, and it was really sad, but we said, hey, nope, taking a step back, not buying it. And so this is what due diligence is like. This is what investing is like. This is what life is like. This is what I'm trying to communicate on this channel, is going through the fine print. So I want to go into now some takeaways from all of this, some practical cheat sheets, if you will, that can help everyone at home. So check it out on the screen right now. And so this really comes down to both dividend investing and real estate investing, whether it's commercial or residential. The example today is residential, but I want to encourage everyone on this channel, in this community, to recognize your level of knowledge, local knowledge. I'm talking about real estate here, but dividends too. When I say local knowledge, you may know about pharma stocks, but you might not know anything about potato chip stocks like Utz. Recognize your level of knowledge. And there's the group one, you've lived there your entire life, or you're extremely familiar with something. And what I would say, even in group one, even though you think you may know a lot, there's a key point I want to tell you. Ask the older generations. What I found with real estate, honestly, with investing, with anything, a lot of knowledge is passed down. A lot of knowledge on things like landfills, for example. It's really difficult to find it on the internet. I almost feel it's by design. I almost feel these landfills are kind of hidden because the powers that be don't want the people to know about it. Because if they did, when you actually see something like this, and you watch a YouTube video, like what is a landfill? What does it look like? What's going on there? It makes you really kind of, it's very eye-opening, I would say. But anyway, ask the older generations about, hey, where are the landfills? Where are the nuclear power plants? Where are the high power lines? What are other, potential deal breakers? Talk to the older generations, even if you think you know everything. Because what I'm saying, even if you think you know everything, you don't know everything. The older generations have some knowledge that's not on the internet that you can learn from. Now, I want to get into group two. Check it out on the screen right now. And so group two is, hey, minimal, nothing. You're new to the area. Know your weakness. I know that when I'm looking at the new community we're looking at now that we're hoping to live in, and by the way, we are finding some other stuff there, not near the landfill, that I think is going to work out for us. But we're taking our time. We're not moving too quickly. But know your weakness, because more and more people these days are overestimating their knowledge, and they are trying to believe they know it all, but they just don't. And so my strategy with each property I go into with real estate, I just assume there's a major deal breaker, and I read all of the fine print. I read every word. Read it more than once if I have to when I'm putting down that kind of money. CC&Rs, everything. And you don't understand what you're reading, hire a realtor, an attorney. In this case, I wasn't using a realtor. I was going about it myself just because I'm a commercial real estate guy, and I felt comfortable doing so. But most people would be better off with a realtor. And my experience literally is, we were ready to move forward, and then I found a deal breaker. And so I would also say, be ready to spend money doing research. Research takes time. And so it takes, this trip we took, it cost a lot of money. I brought the whole family out there. We stayed in a hotel. It was last minute, cost a lot of money. And it was fun too. We got to do some fun things, but honestly, part of that fun was overshadowed by the kind of the devastation of losing this house, because we had kind of bought in emotionally to it. And so all I'm saying, that cost a lot of money, emotional, time, real money, just raw dollars. Realize whether you're going into a real estate investment, or you're going into a dividend investment, sometimes that process to kind of get up to speed, it's going to cost you money. And so check it out on the screen right now. And so the next thing is just a note on new homes. I would say with a new home or a new stock, proceed with extreme caution. A new stock, a good example is Utz. That's why I used Utz today. It went public recently via SPAC. It's new to the stock markets. Shout out to my friend Scott Critical Mass Investing. He's on Twitter. He's my homie. Scott was saying today, like whenever he buys an IPO or a newer company that's newer to the public markets, he allocates less money, because when a stock is kind of new, just like a new home, there can be more unknowns, more volatility. And so he's more careful. And that's how I am. I never kind of thought of it that way, but that's how I am too with things like Utz. I'm going smaller. I bought Coinbase stock. It's my literally only, I believe, non-dividend publicly traded stock, I think it's the only. But anyway, I went really small in that too. It's new to the stock markets. But anyway, it's a very small portion of my portfolio, very small. But I'm like Scott, and it's the same thing on new homes. I'm going very cautiously here, because with anything new, it's more difficult. So check it out on the screen right now. So shout out Scott. Thank you, my homie, for that knowledge on Twitter and for being part of the community here, always supporting the channel. It means a lot. I would say on new homes, the difficulty level, new homes, brand new construction, is maximum. I love new homes. I want to own a new home. I like the idea of being the first one to live there, but I realize difficulty level is maximum. Don't trust anyone. The builder may not have the buyer's best interest at heart. The broker that represents the builder is representing the builder, not the buyer. Have a local realtor. It's probably a good idea unless you're really a professional expert in the area. Even so, have some redundancy. Have a realtor. I would say also be careful. The good land is gone. Think about it. Back in the 1970s, 60s, where did they develop first? They developed the best land. They cherry-picked the best land. What's left now, 2021? They keep going to cheaper land, worse off land. And so you just got to be careful. I just kind of assume it's an efficient market, more or less, just like the stock market. I don't think the stock market's perfectly efficient. There's some inefficiencies that I like to capitalize on sometimes, but I know that, hey, home builders, they're buying whatever's left of land, all the good land, the best land, it's gone. It's gone. And so unless it's being redeveloped into something new, the new land that they're developing, I know what's up there. So check it out on the screen right now. And so because the good land is gone, you got to be especially careful looking at the land, the soils, what's going on in the area, a lot extra time and money. It's not going to be cheap to do this research. And that being said, I would say one note, a positive note on new homes, other than having something brand new in a community that is just pristine and amazing, is it can be a competitive advantage because a lot of these homes, you're kind of buying the lot and waiting a year for it to be built. And if you can shoulder that financially, you can get something really great in a competitive market, and it can be a competitive advantage. And so what I want to do next is first kindly request you all to please smash the like button if you enjoy the video so far today. It really means a lot to me. Please also go ahead and subscribe below. Click that subscribe button, click that notification bell. It really means the world to me. And by the way, if you're not there yet, check out my Patreon. I'll link to it in the pinned comment below. I have a Patreon where I have over 40 bonus videos and a community there. I share all kinds of updates and valuable information there. And it's only $3 a month. There's a $10 a month tier as well. And it helps you support what I'm doing here on YouTube and producing more content like this. And you can cancel at any time. You got to check it out. I have a lot of patrons over there and they are loving it. So anyway, I want to keep going. I want to share a few things that you may want to look into as a potential home buyer in these crazy times. So check it out on the screen right now. And so first thing is just natural disasters. Look at the FEMA flood map in particular. They have a GIS viewer, which allows you, it's kind of an interactive online tool. Just Google FEMA GIS viewer, and you can type in your property address you're looking at and pull up all of those helpful flood zone reports. Obviously, it's better not to be in a flood zone. Also, ask your title officer if the title officer has any natural hazards reports. Sometimes those are available as well. In terms of landfills, I would just say maybe it's not an issue to you at all, but for me, you know, it's something that's important to us. We don't want to be too close or near one. And what I've been doing is just trying to perform deep research on landfills, both operational ones and also closed ones. And I've realized that the real wisdom, it's passed down from local experts in older generations. And it's say just caution. I think it's hidden by design. I don't know why everyone's hiding this, but I honestly think it's part of a bigger scam. I really do. It's kind of, we're in this 2021 world right now where we're consumers and we're consuming so much stuff, and a lot of it unfortunately is ending up in the landfill. And I think day to day people don't think about landfills, they don't look at landfills, but these landfills are filling up and they're so big you can probably see them from space, and they can emit methane gas. And it's scary. It's scary what's happening in our world when I think about future generations. And just this experience, I'd say the silver lining, other than the emotional distress of going through this, the kind of false hopes for our whole family, and then letting, you know, being the one to have to say, sorry, everyone, I read here in line 20 of page 200 of these documents I was reviewing that we just can't do it. The silver lining is I learned a lot more about landfills, and just in kind of looking at that, I want to take more steps in my life to consume less. And I want to try to find ways to be the best citizen of this world that I can, to have less impact on the environment as possible. I realize it's impossible to go without throwing things in the garbage, but being conscious of that, I think it's really important. So that would, I'd say, be one of the silver linings that came out of this. Anyway, let's keep going. Check it out on the screen right now. Something else to keep in mind, I would just say, is methane gas. There's methane gas out there, and it can come from landfills. It can come from oil wells that haven't been capped properly. We had that experience in the first story that the builder was put on pause. And I would say, in terms of a pro tip, just search the public records. Any master planned community that has like CC&Rs, they had to go through some master development agreement, and all those agreements are on file with your local city or county, and you can pull those. And if you can't find it online, go to your local county records or city records, call them up, ask them to pull it for you. Don't rush anything, because in those records, there's usually conditions of approval that there will be for any kind of community like that. And in the conditions of approval, usually they'll say something like, hey, there's a well there that needs to be capped, or hey, you need to do XYZ to cover up XYZ problem, or to remediate XYZ brownfield, or so on and so forth. And you can find a lot in those conditions of approval. It takes more research. It takes more time. I'm talking in the hundreds of hours, but or at least 50 hours, but it's worth it when you're putting your family's health at stake, and you're also putting your hard money at stake. And so I would also say fracking is a new development. Fracking is something that is happening more and more. And you want to try to understand which states have fracking. Is there fracking near the development? Because fracking has been causing some health problems for people who live near those fracking zones. And so that's something to keep in mind as well. And so I want to go with a few more thoughts. And again, this applies to real estate, but also dividend stocks. And so I hope I'm conveying that to everyone today, that when you're an investor, go through the fine print, take the emotion out of it. Don't be afraid to say no. And just because something seems really good, it's not good until you've done all of your research. And if you cannot buy it with absolute conviction, like I own Utz, I have absolute conviction. I'm down over 17%. I'm adding more, and I'm happy to add more. I don't care if it takes 10 years to come back. That's the kind of conviction I need to have to be comfortable with an investment, whether it's a house or a stock. And so I want to talk about leaving something potentially bad for something worse, because there's this mentality that, hey, the grass is always greener. So check it out on the screen right now. And so this is just something to keep in mind if you're looking, like I am, for a more suburban lifestyle, because things are changing where you live and it's becoming more urban, more of a city, more hustle and bustle, a bit too much. Are we really leaving one problem just to have another type of problem, a different problem? And so we're searching for all this dream lifestyle, but you know, where we live now, it doesn't have landfills or methane gas or fracking, but those are things that could exist if we don't do our research and we get into the wrong thing. And so one thing to keep in mind is there's no free lunch, and there are diamonds in the rough, but it's almost impossible to get it all. Either you can find a needle in the haystack, and I've done it, and this is what my job is in commercial real estate. Commercial real estate, more or less, is an efficient market, but once in a while there's something that's mispriced, or there's an opportunity that others have missed. You can find the needle in the haystack, but I'll tell you, the deal cycle, it can take like 4 years. Literally, my average deal cycle from research to opened and operational and business that's kind of leasing up and doing really well, it's like 4 years. Most people, they can do it a lot quicker. A lot of these syndicators, they'll just spin stuff up and do it in like 1 year. No. It takes me 4 years. And the reason it takes me 4 years is I find needles in the haystack, and I treat my dividend investing the same. I treat my residences the same as well, real estate residences. And so it's possible, but realize it really is finding a needle in a haystack, and it's very difficult to do, and go in with that kind of expectation. So let's keep going. Check it out on the screen right now. And so what I want to close on is just move slowly, because one bad decision, if we had purchased this and we couldn't get out of it, and I know we couldn't get out of it, we would have been out over $1 million. And yeah, there's options. I was thinking, like, what would have I done? I was doing like, what if planning. What if we were in it? Well, one option would be to try and rent it out. But then my wife brought up a good position and a good argument. Ian, if you rent it out, you're no worse than the developer of the thing. You're renting it out, knowing that it's only 1 mile from the bad landfill. And so that was something that really concerned me. And I'm like, you know what? That's a good point. And so then I started thinking, well, what if we had it? What else could we do? I guess we could just try to sell the thing later. And hope that whoever's buying it is different than us. They're comfortable living near the landfill. Maybe it's because they're older or they're near retirement. They don't have kids. They're not really worried about it. It's not important to them. So there's always options, but honestly, it wouldn't have been a good position to be in. And so that's why I like to move slowly. I realize that one bad decision, especially with something as big as that, can set everything, your whole life on a terrible trajectory. It's easier to slow down and wait. It's okay to spend a lot of money. This is one of the things I learned from very wise business people over the years is spend a ton of money. I know real estate people that'll honestly spend in the hundreds of thousands of dollars to do research just to find out they're not doing it. They're not doing that deal. Now I'm talking about with bigger commercial deals, but I'm just saying it's okay to spend money to do research. It so is, because that is just the cost of doing the deal. It's a lot different than getting into something and owning it and living it. And so be careful. Let's keep going. Check it out on the screen right now. And so what I would say is the grass is always greener. And so you may have it better right now than a potential can of worms at the next place. And so it's the same with stock investing. Sometimes I would say people are in one strategy and then they think the grass is greener in another strategy and they shift their strategy. Some people say I'm guilty of this because I'm doing a little crypto now. I've been in crypto since 2017, so I've been in it a while, and it's very small. I've always had a speculative side to me, so I just want to make that clear to the community. But yeah, if I were to go all into 100% crypto, that probably would be a case where I'm like, oh my goodness, yeah, grass is a little greener, but there's so much risk with that type of strategy. It's good to find something that works, stick with it, like I do with my dividend stocks, develop competence, develop a sphere of expertise, and just move slowly. There's no rush out there. And any big decision, you might wonder, Ian, by going so slow, do you miss out on deals? Does someone else come in and buy that home, this or that? Yeah. Does someone else come in and win that commercial real estate deal because you're so slow? Yes. But I realize that there are unlimited pitches. It's not a game of baseball. There are always more opportunities. They're always coming. And so you got to slow down and trust the process. All right, everyone. If you enjoyed the video today, please go ahead, smash the like button. It really means the world to me. I'd be forever grateful. It helps spread this knowledge because I need it to get out there. I really want people to hear and learn from my experience out there. And go ahead and subscribe because I have more videos on the way. And check me out on Patreon. Also, check out the pinned comment below. I'll link to my Instagram. I'm doing a lot more on Instagram these days, and sometimes I'm doing Instagram Live, so I want you all to check that out. I look forward to seeing you in the comments below. I hope we have a good discussion around these topics today. Let me know what you think in the comments below. And before I leave today, in terms of full disclosure, I am long Utz Brands Inc., ticker UTZ. I am long Coinbase, ticker COIN. Also, in terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. Or in the case of real estate, your real estate agent, your realtor. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose a lot of money with anything related to personal finance like stocks, real estate, crypto, any of that stuff. All right, everyone. I love you all. I'll see you in the next video.